Good morning and welcome. Patriot Radio News Hour. Joe and Jason on a Tuesday. I hope it finds you well out there. Kind of how this market goes. You get a day, right? If you get a pullback in gold, it gives you about a day. And then, the pullback's over and the rally is back on. Gold just below $2,400 right now. 2387. All the other contracts. So this is an April contract, so a delivery month in April. All other contracts are above 2,400. The February contract, 2,500. What was it? Citi, J.P. Morgan. Everyone's just joining the bus, right? Bank of America, UBS, Goldman Sachs yesterday. $3,000 gold is coming. Listen, we've been saying this. I know, I get it. Man, it just keeps going up. This isn't the big run. This isn't it. Buy it now, and when it's $3,000, hey, you look at how great you've done. If you've never bought gold before, you never bought silver before, you know you need to. I mean, we can pretend you don't, but you know. By the way, Congress, yeah. This conservative Speaker of the House, not so conservative, they've decided, well, we need to spend more on war, guys. We got to do it here. A war-only bill, and don't worry, because we're gonna be careful with it. We're not gonna go crazy. We're gonna keep it, within the realm here, just under $100 billion. That's all. We don't, pay no attention to the fact that we go $100 billion into debt. Like every 100, here's another 100 billion. Here's another 100 billion. I don't know if it'll go anywhere. We're still waiting on an Israeli response to Iran. So that'll always, anytime that pops up. Remember, we did the same thing with Iran, right? At least for like a week. Every couple of days, attack is imminent. Why do I get a feeling? I could be wrong. Maybe it'll happen. But they usually like to do this stuff on the weekends, right? Because that's how you know it's all planned. Just like with Iran and their response. And, of course, we shot down 99.5% of it. We let a couple bombs land, but no one got hurt, right? Nobody died. So, I don't know. You call it luck, whatever you want to call it, or call it an orchestrated event. But I'm telling you right now, what they're orchestrating is simply the purchasing power of the majority of Americans is going to go away. And this is what gold is saying. Jason and I have been telling you this. Listen, they had two choices. Well, they had three choices. Okay, one, they could have fought inflation. They didn't. Right? Think about, for a whole year, inflation was transitory. For a whole year, it was transitory. A whole year. Come on. Right? Then they got it to about 4%. And then what did they do? They stopped. And what did they say? Oh, it takes a while. Right? We gotta wait. It takes a while, right? To catch up. So here we are, 9 months after the last rate hike, and what's happened? Well, inflation's going back up again. There's a big shock. Why? Well, because they keep spending money. So they could have fought inflation. They decided not to. They could have decided, okay, well, the heck with inflation. We won't do anything. So what did they do? They did a half, right? Well, we pretended to fight inflation. We didn't really want to kill it. And, Jason, now we're getting ready, just like the 1970s, we're just getting ready for the next leg of inflation.
Yeah, all asset classes seem to be in a consolidation mode, which means it doesn't go straight up, but it's going kind of sideways, maybe down a little. And I'm talking all of it, Joe. It looks like all of it's just getting ready to just blow up. And that means if you don't have your money in assets, and that's anything other than dollars, you're suffering. And I'll say this, you could just say, hey, if Jason's right, I could just throw a little bit more money into the stock market. It's going to go up. What you want to be ready for is what's going to happen after the next upward cycle, which is really being triggered by inflation. because what markets really are fake in record territory and which ones are not. Gold is finally showing up in places that it should be, and the market is continually showing false value while you have a handful of stocks holding up the entire thing practically. So, yeah, if you can put your money in some of these other asset classes and watch it go up and feel really good about yourself, but you're not holding these assets. These are paper assets. This is somebody else is holding that for you. And when it goes down, it will go down dramatically just as much as it goes up dramatically. And gold and silver, I don't see a crash in the gold and silver prices, Joe. I don't see it. This is not 2011. This is not 2011.
This is a much different time than 2011. Man, 2011, was that the good days? Was 2011 the good days? I mean, well, I don't even know I would have to look. What was the deficit in 2011?
I know the national debt was probably like, wow, I mean,
maybe
12,
10,
12?
15, 12?
It was about
12.
12.
That's
12,
probably right. 12's probably right. Now we're already right. Think about what they're already saying. By the way, national debt's going to be $37 trillion this year, and way over $40 trillion next year. We're going to pay $2 trillion in interest, but don't worry. Somehow it's going to be okay. And I think this is kind of the thing that most people are starting to worry about. As like we had more banks today, the last of the big banks, Bank of America, of course Morgan Stanley, they're in a bunch of trouble, but they had good earnings. Bank of America, though, saying, hey, commercial real estate write-downs, yeah, they're getting a lot worse. That could be trouble, not for them, but for a lot of these other small banks. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Tuesday, the year of chaos, man. What a great call that's been, huh? Man, crazy, crazy things out there. Right now, the Dow trying to have an update. I don't know if it's going to. Right now, it's up 60, 37,800. So, been taking it on the chin here. Apple, bad news. Samsung has now taken out Apple as the largest cell phone, I guess, seller in the world, as Apple phones in China have fallen. Demand has fallen. Listen, they're expensive. Let's call it what it is. I mean, hello. Remember when they used to just give you the phone for free? Right? Because, hey, if you sign up with a plan, here's a phone for free because they were cheap. Now they want, I don't even know, $1,500 for a phone. I mean, this is probably to be expected. The S&P is down 10, 5,050. So the S&P kind of, is it going to break back below 5,000 here? The NASDAQ off 12. Crude oil's a little higher right now, right around $86. Unleaded gas rising as well. And again, I think this is going to be, okay, when does the retaliation occur? If it occurs on the weekend, I think we'll be okay. If it occurs during the week, right, we'll probably see, $90+ oil? I mean, that's probably what will happen here. The 10-year note, 4.65. It got it almost to 4.7 earlier this morning. As we said, gold's red hot right now, 23.86 right now, up 20. Silver, I really like what silver did today. So silver broke above 29, went all the way back, and tested $28 again. Let's just make sure here. Held it. Now coming back here, 28.35, but a pretty strong, when you're talking about, hey, wait a minute, it's down 30, 40 cents, and you're like, hey, that's a pretty good day. And again, it's just about building up these new lows, right? These new higher lows. Gold, 23.25, doesn't seem to really want to go below that. And silver now, 2 days in a row here. Let's test $28. And silver holding strong here as well. But the need, listen, I'm telling you, the need to be diversified is here. when we start looking at what's going on in gold, you start looking what's going on in the bond market. And now what is our government? Oh, gosh, we got to spend more money. Heck, even the IMF is starting to warn about, okay, guys, wait a minute. Hey, time out here. Have you guys seen what Bank of America just said about what's going on with how bad it's going to get? It may cause a problem here. Get yourself diversified. If you want to have, you got an IRA. Let's just say you got an IRA. Listen, you're getting your gold, you're getting your silver, right? You can do your gold and silver IRAs right through us. If you've got $50,000 or more, I encourage all of you to check out YRefi because you can get up to 10.25% fixed rate of return. Doesn't care about Wall Street. Doesn't care about anything that I have to say. It really doesn't. Or Jason. Doesn't matter. Right? Fixed rates of return. You can turn your income on. You can turn it off. They don't play games. They don't have fees. They don't attack principal. I mean, it's such a great company to deal with. Check them out, investyrefi.com. That's the word invest, the letter Y, REFY.com. Or just make it easy. Just call them 888-YREFI24. 888-YREFI24. So, last night, Speaker Johnson apparently decided, well, remember they were going to do the war funding with the border? Right? That was going to be the trade. Okay. All right, guys. Tell you what we'll do. You give us all this money for war, and we'll do something about the border. Well, apparently that's gone. Forget about that. Just kidding. According to the Washington Post, a new bill making its way. It's a Senate-approved bill allocates $95.3 billion that we don't have. They call it supplemental spending. That's a nice word. It's supplemental. We're just, taking it from, oh, wait, we don't have it to take from. We're just throwing it into the debt pile. $60 billion for Ukraine, $14 billion for Israel, $9 billion for Gaza, and $5 billion now. Apparently, they couldn't say the word Taiwan. Okay, apparently that's not allowed, so they called it Indo-Pacific Allies instead of Taiwan. Because you don't want to make the Chinese upset. We're going to give them money, but that's it, Jason. Nothing else, just this. Give us another $95 billion, and don't worry, we'll just sell more treasuries. It'll be fine. What could go wrong?
Yeah, just keep trusting your side of the aisle in Washington and see where that gets you. I remember when they replaced the other guy in charge, and this is going to be better. This guy's going to be so much better. And I was thinking, well, until somebody passes a bag of money around in the halls of the federal government, and then suddenly the tune changes, right, Joe? So. A whole lot of money going to places that we really have no business being in. But, hey, the pockets of big business and bankers need to be filled and filled right, and they're doing the job that they were paid to do.
Now, call me crazy. I mean, let's see, Ukraine, corrupt. What were they known for? They sold a lot of weapons. They were home to a huge group of Internet hackers. And they had a government that was completely corrupt, but somehow we decided they need to be. Oh, we gotta get them part of NATO and do all. I mean, ridiculous stuff, right? And how many hundreds of? I mean, by the time we're going to spend $1 trillion there, by the time it's all said and done, again, it's about covering stuff up, and this is what most people haven't figured out yet, Jason. They don't know. They. If you, depending on where you get your news, you probably think Russia was the aggressor. It wasn't. I'm sorry. But that's just the truth. We decided we needed to do it for whatever reason. Well, I think I know what the reason is. And this thing's far from over. Same thing what goes in the Middle East. But this morning, and like I said, I've been doing this a long time. I don't think I've ever seen this. The International Monetary Fund, which basically, right, I mean, let's call a puppet for the United States. All right, right? I mean, we're the big money behind the IMF to begin with. Issued direct criticism of the United States this morning, saying the country's recent standout performance. Right, just look at the stock market. Right, look at GDP number. Look, oh my gosh, it's great. Well, they said driven by unsustainable fiscal policy, according to the IMF, saying that the fiscal stance is out of line with long-term fiscal sustainability. Something will have to give. And again, this is just math, right, Jason? This isn't, oh my gosh, what a prophetic statement and all of this. No, now they're talking about, U.S. And here's what's so funny. The debt, which has been exploding, so they're talking about deficits, not 30 or 40 or 50 trillion, Jason. They're talking numbers that are crazy, that by 2030, so think about this is what, 5.5 years, a little over 5.5 years from now, you're going to be talking about debt levels approaching $60 trillion. And that has nothing to do with Social Security or the rest. And the debt spiral, it sure looks like it's coming, because when we take the bond market, why is the 10-year note going up so much? Right? Why? Why is that happening? And why is it that they're saying, man, I don't know if they can cut rates now? It's because we just continue to spend like it's, we're spending like it's COVID, right? It's not COVID. And without it, obviously, Jason, without it, guess what? We wouldn't have inflation right now, right? If we were running a $500 billion budget, that still would be crazy numbers, right? We'd probably be talking about, we're in this recession / maybe depression. So instead of doing that, let's just go $3 trillion into debt and pretend it's okay.
Yeah, no, I agree. It's just, and then you brought up the IMF, Joe. It's don't underestimate, the fact that Joe doesn't show a lot of respect for the IMF. Don't underestimate the IMF, because the IMF is kind of like the backup quarterback, right? People are starting to figure out the Federal Reserve. They're starting to figure out that that's bad. I was watching an interview with Thomas Sowell. Some people, you don't know who that is. He's a very intelligent man, very common sense thinking, and he was being interviewed about this subject, about central banking. It was the best comment. Joe, listen to this. It's great. He's like, what do you think of the Federal Reserve Bank is? Of course, he says horrible. It's just horrible. It's enslaving people. It's terrible. And he's like, so I guess you're in favor of getting rid of the Federal Reserve. He's like, yes. And then the guy's like, well, what would you replace it with? And he said, I don't know. If you get rid of your cancer, what are you going to replace it with? He's like comparing the Federal Reserve to cancer, and that's the thing the media will tell you. Well, we got to replace it with something. The evil Fed needs to go away. That's the International Monetary Fund. They will not be as corrupt as bureaucrats in Washington D.C. They will run it in a fair way for everybody. And I think that's the only reason, Joe, that the International Monetary Fund is even in existence. Is it needs to be if the other guy's considered the bad guy, we'll sacrifice the one bad guy, but it's all the same guys. But it's got a different name. And yeah, Joe, everything you just said, it's the International Monetary Fund. Once in a while, I guess we'll throw you a bone. I guess once in a while to tell you something that sounds realistic, but don't believe anybody in Washington says, "Oh, we need to replace it, we need to change it, we need to alter it." That's what Ramaswamy was saying when he was running, and that's why I didn't like the guy, because you have to eliminate it. The only way it gets better is if you eliminate it, Joe. So, yeah, don't beware of the IMF for sure, Joe.
Yeah, I mean, it's just, I guess the biggest thing to take from that story is even the IMF is saying, okay, this is guys.
Yes.
Like,
yep.
Do you know what you're doing? Right? This is going to get ugly again. And then news out of Citigroup today, raising its gold forecast to $3,000, saying the rally, Middle East tensions and safe haven appeal, and blah 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 blah. But the bigger story is coming out that in November, Goldfix broke a story that a New York bank had taken physical delivery of COMEX gold and sold it to China. Now, that normally doesn't happen. China gets most of its gold. They have their own exchange, the Shanghai Exchange. Most of it comes from Switzerland. The bars get refined there. That's where they get them from, followed by London. It is now apparently there's been a follow-up saying that this story actually is true and that J.P. Morgan was the bank that made delivery of COMEX gold to the Chinese. And it just highlights, Jason, remember, we keep talking about inventory problems, right? This highlights inventory problems because obviously the Chinese and the rest of it, hey, we'll get it from the Swiss, we'll get it from the English exchanges because it's just cheaper. They don't less to ship, it's closer. Having J.P. Morgan having to deliver physical gold from the COMEX to China, I think kind of tells you the big move's getting ready to come, isn't it? Patriot Radio News Hour. We'll be back. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Wednesday. Janet Yellen said they are now preparing new sanctions on Iran after it launched hundreds of drones at Israel over the weekend. Not sure what sanctions they're going to be talking about, but if it involves crude oil, right, all bets are off the table here. I doubt it will, right, because, let's face it, that'll really blow things up. This morning, Bank of America had earnings, and, man, they wanted it to be good. It beat on the top. It beat on the bottom. What a great report. I mean, CNBC, they were clapping and cheering. The Dow was up over 200 points. And then somebody actually read the report. And now Bank of America stock taking a pounding as loan loss reserves skyrocketing at Bank of America. They had to write off $1.5 billion in write-offs. In other words, hey, these loans are dead, right? We're writing them off. Send them to the collection agency. They're not going to pay. Credit card losses, commercial real estate office weakness amongst the biggest gainers at Bank of America. They're now saying that the credit card loss rate, 3.62%. Now, why do I bring it up? Well, in the fourth quarter of 2023, so, figure right around Christmas time, it was at 3.07. So almost a 20% increase in 90 days in credit card losses at Bank of America. How about commercial charge-offs? $470 million in just 90 days, almost doubled what they did 90 days earlier in the commercial real estate space. So, Jason, Bank of America, hey, think about it. The stock market had a great quarter in the first quarter. So all these banks, we did great on trading. You know what? It hasn't been so great since April, has it? But the big part of this, Jason, is the big increase in the charge-offs. This rolling, slow rolling train wreck we've been talking about. It's starting to pick up speed, and we saw this. We didn't just see this at B of A. We saw it at J.P. Morgan. We saw it at Citi. We saw it at Wells. And these major banks, we know they don't have huge exposure to commercial real estate like these other banks do, but you throw credit cards and auto loans into the mix, Jason, and you can see why so many people are still insisting that the Fed needs to cut rates to help these banks.
Yeah, these market makers may not like gold, but with gold's big move in just the last handful of weeks, shows exactly what you're saying, Joe, that things are getting ready to move faster. Who's going to make their way to the exit quicker, right, so to speak. But yeah, I agree, Joe. I agree. It's what's going on in the last bunch of weeks. What 2024 is turning into is either something big's going to happen this year, right now, soon, and then there's going to be repercussions for months and years to come. Or maybe it gets pushed a little further down the road. But it sure seems like whatever big happening is going to happen, and then all bets are off as to there's so many avenues as to what can happen. But I think this is going to be an inflation emergency. And, you look at your portfolio and it's going up. You think you're doing great, but then you go to the grocery store, and how great really was it, Joe? That's what people need to understand. You better park your money in somewhere that protects your value of your time and efforts, all that little piece of extra paycheck you had at the end of the month, that little bit of savings. Don't put it in the bank and let it sit there and look at that number getting bigger. Get some gold and silver, see how many ounces you can stack up, because that's where you need to be. And Joe, there's no guarantees as to how fast and how far this inflation will go. This could be years of inflation. This might not just be 2024. This could be higher inflation for this year and next year, the next year. And it can be very, very severe. And here's the thing, it'll sneak up on you until all of a sudden one day you just get smacked in the face with something that you buy every day, and suddenly it's like double, triple, quadrupled, 10x in price. And you just ask countries that have had hyperinflation, just go find out how shocking it can be and the fear of it. Right now it's just a inconvenience, and it's making people frustrated. But the people are not fearing inflation yet. We know, Joe, because of how people are spending money, how they're behaving. But that fear of inflation, that could be coming. And then watch out, right? Then watch out, see what happens.
Well, I'll just say this. Just do what Jamie Dimon's doing. How's that? In February, J.P. Morgan's Chase leader Jamie Dimon sold 821,778 shares of his beloved bank for a tidy $150 million in change. And Jamie Dimon said that he's going to sell even more stock in his bank, as he's saying that regulators want the banks to carry a lot more capital than what they're currently required to carry. And Jason, I think this is, again, another one of these telltale signs. Remember last week we had these horrible auctions? I was saying, oh my gosh, 3 days in a row, that doesn't happen that way. All of a sudden, that reverse repo now, it's at the lowest levels now since when they opened it. Right? They opened it, there's usually a couple hundred, $200-300 million in there. That's all that's left in there. There's no more money in there. And Jamie Dimon's saying, oh, by the way, the central bank wants us to keep more capital. Now, why would they want them to keep more capital? Let's see. Because they think all the loans are going to start performing and they're not going to have to write anything off? Well, God, no, that wouldn't make sense. Right? That would be, well, gosh, you can keep less capital. If that was the case, they already know. I think this is baked in the case. I think this is what the most people aren't aware of, and I'm finally starting. I'm a little slow. I'm not the sharpest tool in the shed, but I'm coming around here. I'm not going to be surprised if come next year there's 1,000 less banks in this country, maybe more. I think that's what's coming. I think this is the reality of what is really getting ready to happen here. There's no doubt in my mind.
Hundreds and hundreds of banks disappeared during the 2008 housing crash, and it only really started in 2008 as far as bank failures. It zoomed upwards the next couple of years. 2010, 2011, you had these massive amounts of banks failing. After the initial damage. So I think it was like 600 or 700 banks went away in that time frame, Joe.
Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour. Gold's up almost $20 here, $23.85. Silver now $28.37. $5 Liberties. We ran them yesterday. I still have some available. So if you want to add some fractional gold, $665. Gold's up 20. And really, from yesterday, man, gold was like 23.40, 23.45 when we were on the air yesterday. So gold's up like $40 from when we were on the air yesterday, which, we translate that should be an extra $10 on $5 Liberties. Nope, I'm going to keep them at $665. Buy 20 or more, $660. For those of you that are out there saying, okay, I get it. I know, right? I was waiting for the opportunity to really add to my portfolio. I want to protect what I've already worked so hard for. I want to protect that money that's in the bank. $20 gold pieces. This is going to be the biggest special probably this year on $20 gold pieces, at least relative to price. 1 through 49. $2,525. Okay, so you're sitting there not even close to $200 over. So what is that? $145. If you buy 50 or more, $2,495. So, I mean, we could see, it's very possible. We could see $2,400 gold today, and you're buying 20s. If you buy 50 or more at $2,495, it doesn't get better than that. 800-951-0592. And Jason, I think it's kind of an interesting day. Be thankful for United Healthcare today. Remember, United Healthcare, they had that big hack, screwed everything up for a while, and then the government said, hey, we're not going to give you as much money for Medicare and Medicaid as we promised. They actually surprised today and had a decent earnings report, which is saving the Dow right now. But Jason, really a situation right now when you look at what the bank said. Hey, thank the Lord that the Dow went to 40,000 and the S&P went to 5,200 because write-downs are starting to pile up here. And now the question's going to be, what is going to happen with these smaller banks? What is it going to look like, especially if we go through a quarter, let's say the second quarter, where, hey, you know what, maybe the Dow finishes at 37,000, maybe 36. We don't know. Does the S&P go back below 5,000? What's going to happen to their balance sheets?
And also not what is going to happen to these smaller banks, but maybe when is it going to happen to these smaller banks? Because the when is when things is that's when everything starts to change, right, Joe? And we've seen the change in gold suddenly. We're seeing how the markets are reacting to what I believe is a leading indicating the factor that inflation is going to get worse. I've been saying it and saying it. I'm going to keep saying it because it should get you to proactively move your finances into a better place. Because, Joe, I don't trust any of these companies in the stock market. I mean, anything bad or good, we don't know what these companies are doing. Before you know it, one of these rock-solid companies you think are such a good place to put your money, suddenly there's something going on there. Oh, no, and there's corruption, there's this, there's that, there's misappropriation of funds, and suddenly that company is no good, on top of the fact that the market is propped up. So gold hasn't really ever been corrupt to anybody because it's not a person, it's not an entity, right, Joe? Gold is just a rock solid, thousands of years example of safe holdings of money. So Joe, we'll see. How many banks are going to fail, and really the biggest question, when's it going to happen?
Yeah,
I think that's this year, next year, and the year after.
And let's not forget this AI boom thing, right? Every company seemingly was, we're spending money on AI. I've got a feeling that AI buzz is going to wear off, and it's going to be an interesting. It's going to be an interesting time frame if Congress passes this, which I don't know. The Senate's already said we want the $95 billion. If the House follows suit here, Jason, just throwing more logs onto the fire here. It's an unsustainable fiscal path. Anybody that has any common sense can see this, and now these interest rates are starting to make a difference. There's a huge difference when you have to pay 4.5% to 5.5% to roll your debt over versus paying, say, 4%. How big of a difference? Hundreds of billions of dollars in more debt. I mean, you're a difference between, say, 4 and 5. You're probably talking with this level of debt now, 300, 400 extra $1 billion of debt. And Jason, I'm going to tell you right now, these auctions have become unsustainable. Foreign demand has continued to dry up. And now, we had Janet yelling over, oh, yes, we're complaining about solar panels. They were complaining about solar panels, okay? They weren't over there about, don't you help Russia. No. They were over there because they know we've got debt problems. And, of course, China's like, listen, we got our own problems. Look at the Japanese yen. You know what? Almost 155 of the Japanese yen. I think 160's right around the corner. But unfortunately, I don't think it stops there, right? These are countries in distress, and their only recourse is to sell treasuries, not buy them. $20 gold pieces, $25.25, 50 or more, $24.95, 800-951-0592. Final segment coming up. 800-951-0592. Final segment on this Tuesday. Right now, gold's up 21. 23.86, almost 23.87. Silver's down 30 cents right now at 28.40, but really like silver today. Another test at $28. Held that, so silver broke across 29 again this morning, and then, someone tried to, take some profits down. A good retest there. That's a really, really good sign. And let's not forget, J.P. Morgan delivering gold in China. This was a story that broke at the end of last year, got confirmed that it actually happened. And on top of that, as we told you, silver's $30 in China on their exchanges. Same thing with gold. Gold's much higher there than it is here, and we're seeing the catch-up here. U.S. $5 liberties, these are the quarter ounce, the old quarter ouncers, right? We've had a $40 move since yesterday, but now $42 move because it's $23.87 now. Same price, $665. Buy 20 or more, $660. You buy 20 or more, you're paying only $2,640. That's nothing. It's nothing. $20 gold pieces, though. This is where we're going to make it worth your while here. 1 through 49, $2,525. 50 or more, $24.95. So right now that's what, $107 over spot, with a spot price of almost $2,400. I mean, that's doing it there for you. That we're doing all we can when we can for everybody out there. 800-951-0592. And Jason, it's kind of interesting how this week all of the major big banks now changing their tune on gold and kind of letting everybody know, okay, the gig's kind of up, right? Most of these banks were predicting gold of like $2,200, $2,100. Heck, I think one of them even only had $2,000. And now we've got a range of the low of 2,700 all the way to 4,000. And the vast majority of the banks are saying 3,000.
Yeah, there's really no stopping it if it's going to go. If it's going to go, it can go. But we've seen this before. I think realistically, Joe, we're not going to see $6,000 or $7,000 gold this year. I know that there are these emergency situations where gold can go magically completely out of control. One thing we touched on, Joe, is what if it happens like the nickel market in China, where it starts to spin out of control, the physical starts to be claimed, like that deal. Whatever that deal was, China wanted their payment in gold. That's what that was from J.P. Morgan. They wanted all that other stuff you said, Joe. But one thing is, China decided whatever the payment was for that deal, they wanted their payment in gold. They didn't want it in treasuries. They didn't want it in oil or anything else. They wanted it in gold. So there is that possibility, Joe, where physical delivery starts to be, maybe not physical demand, but physical delivery gets moved very into orbit, and then you have a shutdown. That's the one thing. What happens if the gold market has to shut down? And I've heard stuff shut down for a few minutes. I've heard it shut down for several days. What's that price going to be when it opens back up? I guess that would be the scary scenario, Joe. And you better have gold before that happens.
Yeah, they would too. I guarantee you, they'd shut it down in a heartbeat. 800-951-0592, Patriot Radio News Hour. Jason and I will be back tomorrow, but we're going to come right back with the half-empty cup. Stay